as well. Let's just see, we got some people here. Right, got some in the room. Right, how are we all doing? Oh, I'll tell you what, let me just change this background. Because we don't want this, do we? Let's get this one. Okay, right, so let's have a look at the markets and just see if we can get a feel of what we need to do with it. Oh gosh, what's going on here? Because there is some movement around. Let me just share my screen for you guys. See how we're doing with general trading. Here we go. Right, you should be seeing my screen here. I will change the chart color to black. Hi, Catherine. I'm good, thank you. I'm good. Okay, let's have a look. So we got let's just change this to white because this is just easy to see. So we've seen this run in the dollar. Now we'll quickly check before we kind of fully start on this on the dollar stuff. Let's just see where we were last week and what's been going on. So I'm just going to open up investing.com and just have a look at the calendar. So I'm just going to go to tools and economic calendar and just see what happened last week. So we can kind of, get a bit of a feel of where things are going. Now, if we were going to start at any particular point, so really you can start with the chart, you can start with the fundamentals, you could start with COT data, or you could start with seasonals. Now, seasonals are quite interesting, but you've got to be a little bit careful with seasonals, because if you see a positive return over 20 years, that may well have been returned over 5 of those 20 years. So you might see sort of 5 years bump 10% each, and 15 years go down, but they only go down by 2%. So it kind of like gives the impression that the seasonal bias is long, where maybe the seasonal bias should be a bit more balanced because there might be a few outliers. So you've got to be a bit careful. But hi Yasim, but we will have a look. And Chun, good to see you guys. And we will have a look at what the seasonal charts are suggesting and what the probability is. Where's the probabilistic weight of the seasonal patterns right now? Now the reason I say that is because it kind of like then starts to push us towards which fundamentals to look at. So actually, let's just sort of like start with the seasonals, and I'll see if I can write it here. So seasonally, we are looking at the JPY. Okay, this is the strongest seasonal currency. We're going into a strong seasonal period. This week's a little bit patchy, but over the next 4 weeks, we're going into a strong seasonal pattern on the JPY. So it's a good place to start, and it kind of like allows us to kind of point towards certain currency pairs and ignore others. Now, the best seasonals, and I've got mine on spreadsheets, so they're not going to be of any particular understanding to you guys, but I'm just going to tell you the best seasonals that we're coming into is really the Kiwi yen and the dollar yen. Okay, so we can then sort of like have a look at the Kiwi and we can have a look at the dollar. And that's because when you look at the seasonal pattern for the next month, the CAD is in there, but over the next month, the yen has outperformed the CAD 60% of the time over the last 20 years. It's the same over the month over for the Kiwi yen, and the dollar yen the yen's outperformed the dollar by 70% over the last 20 years. So there's some really strong sort of like pushes towards Kiwi yen short, CAD yen short, and dollar yen short. Now, if you push out into the 3 month period, and the reason that I would push out to a 3 month period is because then it gives you some margin of error. You know, if your timing is a little bit off, you can kind of continue to look at it. Then the Kiwi still underperformed. The yen still outperforms the Kiwi by 60%, and it outperforms the dollar by 60%, and the Aussie. But because the Aussie's not in the monthly picture, then I'd focus more on the Kiwi and the dollar. So then we can start to look at hot data because it's a starting point, right? It's an easy starting point. Let's look at the seasonals. Now we can look at the COT data and the fundamentals and see what the fundamentals are suggesting about these three currencies. What we're looking for is yen strength, and we're looking at dollar and Kiwi weakness in both the COT and the fundamentals. And then we can sort of like bring in the chart patterns. And of course, you can circumnavigate the fundamentals and the COT data if you just want to look at the chart. That's absolutely fine too. Okay, so focusing on that. Is there anything here now? A little bit of weakness in. We can get a kind of macro picture of the globe by looking at all of them, but looking at the Aussie here, a little bit of weakness kind of coming into the Aussie with manufacturing data. That sort of points towards the yen because the Aussie tends to be a risk-on currency. So we can look at a little bit to do with the Aussie. What are these suggesting here? Not a whole bunch. Manufacturers index, that's so solid right now, so from last week. 10-year JJB. Now this is quite interesting to look at because it's how the bond market feels about the yen, and you can see that they've been really kind of pushing the yields a lot higher, and the yields have just come off a little bit here, but yields higher is kind of expecting higher interest rates. So they're looking at higher interest rates, but generally speaking, this is in an upward trajectory. So they're still sort of like believing in the interest rates from Japan, and that is bullish for the yen. What else have we got? Household confidence is pretty solid by the looks of things. Let's have a look. Yeah, we can see that household confidence has been building again. So another bullish sign for the yen. Look at that. Dropping commodity prices from Australia. Let's have a look at what the. So that's kind of suggesting that this is disinflationary, which would be disinflationary for the Aussie. CPI from the Eurozone relatively flat, from 1.9 to 2%. That's a pretty good number. So they've got to be relatively comfortable there. Wouldn't suggest any a collapse in the euro. The Fed Chair Powell speaks now. He did actually state that interest rates could start to come down a little bit more. So that was bearish for the dollar. So this is sort of stacking up for a dollar yen short when you kind of look at this stuff. And then you look at the data. So really, global manufacturing data is important, but you really want to be looking at the ISM. And what we can see here from the ISM, manufacturing data is still under 50, and it's been there for quite some time, and really kind of in this contractionary period. So the dollar, the US in the manufacturing sector has not been really performing too well. If you look at this historically, now the dollar has been pretty low. If you look at this historically, from 2020, from 2010 to where we are now, this is in the lower band. There was obviously this kind of collapse during the COVID-19 pandemic, but generally speaking, this is in the lower band. So this is in contractionary territory here, and that is the big situation that's going on with the Fed and Jerome Powell. He's kind of pushing towards saying, look, inflation's a bit of a problem, but actually, I wonder whether, because that they haven't got a binary situation in America. What they want is unemployment to be building and inflation to be dropping so they can lower interest rates because they don't want higher unemployment, but they want an easy decision to make. And that easier decision would be if unemployment rises, so the labor market loosens and inflation weakens, then they can loosen policy. But the situation they got is sticky inflation and just a creep up in unemployment, which is problematic because they're like, well, we need to kind of fix something here to kind of inject a bit of life into the economy. But if we do that by injecting some money in, that could drive inflation higher, and we're not in the situation just yet where it's that comfortable. I think the 0% inflation band is done. I think that situation that we had over the previous 10 years is highly irregular. If you look at this on CPI year on year from the Eurozone, look where we were. We had 0% interest rates here, kind of coming into 2020, and this after the financial crisis. But generally speaking, inflation does not go, it's not kind of falling under that zone. And if you look at the Fed and its the interest rate, see if I can get the interest rate back here. Then the interest rate at 0 is unusual. It's an outlier. So we can't expect it to go back to 0. Where we're probably headed is closer to 3, right across the board. I think that would be, a relatively comfortable place for most central banks to exist. And because the Fed are currently at 4.5, they've got some room. They've got some room to reduce. ECB might be closer to 1. The Bank of England might be closer to 3. So these have all got kind of some room to reduce. The Bank of Japan is at 0.5%. So, yeah, they may well sort of like come down because they, again, are a bit of an outlier, but they may well come down. But that's probably a relatively comfortable spot for them. Again, relatively bullish. Manufacturing prices. Now, this is another one. So if we look at this will enable us to kind of like get a gauge on inflation and look at how it's just ticking higher. And this is the conundrum that the Fed have got. They've got higher inflation, or certainly inflationary factors, and a weakening economy at the same time, which is not the best scenario for them to make decisions on. Monetary base, that's probably not a number we need. Non-farm employment, look at that massive drop. That is very bearish for the dollar. That's very bearish because, again, it's going to kind of push the Fed into that situation. Now, remember, you've got an incredibly dovish president right now as well. So Donald Trump is already kind of putting a lot of pressure on the Fed to lower interest rates. So this is stacking up. This is stacking up to kind of, go with the seasonal bias of a dollar-yen short. The Kiwi will probably get drawn down with a dollar-yen short because the global economic environment is weakening. So that will probably push the Kiwi down. It'll probably push the Aussie down. It'll probably push the CAD down as well. You need to look at oil, of course, to see what's going to happen with the Canadian dollar. Difference here with the services PMIs from Japan, solid, 51.7. So that's a decent number. Commodity prices, again, weakening from New Zealand. So we're still sort of focusing on that. Quite a big drop, actually. Not seen this type of drop since 2023. So a little bit of disinflation there. Problems for China with growth. This is relatively stable. And now we get to some of this stuff as well. So again, we want to look at the average earnings because the average earnings are kind of telling us about inflation. A little bit of a drop back, but if you kind of consider where we are with average earnings, we're just a little bit above the kind of. If you look back here and look where we are now, we're just a little bit above. We're floating along. So the economy and the inflation narrative look like it's flatlining, really. It's not kind of getting any better, any worse. Let's have a look at non-farm payrolls and see where they're at. They've flatlined. And finally, let's just have a look at the unemployment level here. Relatively flat. I mean, it's just ticked a little bit higher, so nothing sort of like disastrous, but it is kind of pushing towards some possible weakness in the dollar. We will just have a look at the non-manufacturing PMIs as well. So it is a service economy, and the service economy is kind of halting along that point. So looking at the fundamentals of kind of where we are, the information that we had sort of last week, it does sort of like point to a potential for the dollar to weaken. Um, Now we know that global kind of uncertainty, and we've got the tariff situation kind of like looming again because Donald Trump put a pause on tariffs. He put a hiatus on it for a period, but that period is starting to expire. So that global uncertainty again pushes towards the yen. So we got seasonals that are 60%, not that high, but they are 60% in favor of the yen over the course of the last 20 years, 70% over for the next month, 70% in favor of the yen over the course of the 3 month period over 20 years. So we have some seasonal kind of bias to going towards the yen. Now let's have a look at the COT data. The COT data is tricky because we haven't had because of July the 4th, we haven't had this week's COT data released. But let's just see where we were. And there are certain groups that we're kind of more interested than the others, and I will show you the charts. Right, so let's have a look at the yen. And what we can see here, open interest is pretty good for correlation for the yen. So when open interest tends to go up, it tends to be pretty positive. I'll just double check I've got that the right way around. I've got stacks and stacks of spreadsheets, and they all tell me something slightly different. Same outcome, but just I've just got them full. So actually, open interest is negative for the yen. I'm glad I checked that. So open interest building tends to push the others. So we can see that that this is starting to drop. Now I will quickly. When I do this. Actually, it might benefit you guys to see this. So let's see if we can do this really quickly. We're gonna put on a dollar yen chart. Let me just see what dates I've got here. Yeah, okay. Just so you can see it. Now, you don't have to build this chart, but what you can do is I will show you the COT data that you're sort of going to focus on. So let's do this. We're going to have open interest. Let's plonk in some data here of the dollar yen. Here. And then I'll get rid of this chart a minute. We'll use that. We'll insert this chart here. And it's not going to work. Different way. Open interest. Oh, I see what's going on. Okay. You got me till 2019. Okay, so I'll tell you what I'm going to do. I don't want to mess my charts up here. Don't want to mess up my spreadsheet. So what I'm going to do is this instead. Put it on this one, and we will copy over this and this. And I'll put this up here. And I'll copy over the yen data. Over here. And then we'll get rid of the bottom. And all I'm going to kind of show you here is the correlation between the dollar and the yen. Now there's two ways you can do this, but I'll show you on the chart because I think it's a bit cleaner. It's not coming up the way I want it. Where are you? Should be all fine. Okay, so what we'll do. Let's take these two to start with. Now, what is that giving me that way around? Maybe it doesn't like that. There we go. It didn't like the way I was grabbing. That's okay. Right, so let's have a look. Change this up so we get this as our combo. Make both these lines because they're easy to see. We'll put that on the secondary axis. Right, and then we will just tighten this up just so it is. This is the dollar yen, by the way. Tighten this up so it's just coming down a little bit. Let's put it on 80. And now you can kind of see the correlation, you know, it kind of floats along and you can see the kind of rises here and falls here and rise here and a fall here and a rise and a fall. This is kind of telling you what's going on with the, it is the dollar yen. It is the dollar yen, sorry. So we want to see now open interest turn. I think it's positive correlation with things like the Aussie, but when it comes down to the dollar yen, this will tell us a lot about where the market believes the dollar yen should be going. So dollar yen starts to rise here, and eventually the open interest starts to rise, but this is starting to fall again now. So what we should be sort of looking at is dollar yen downside. So this is open interest falling will be positive for the yen. It tends to be positive for the yen, but negative for the dollar yen. So we've seen this starting to fall here, and this was the signal. That was the high. Well, actually, the first dive down was really on the 11th of March. That was the first kind of signal, but you can see it's still kind of like, you know, it's still starting to drift to the downside. So COT data is supportive of dollar yen downside. So we've seen this, like the seasonals are kind of suggesting that there's a 60% chance that the yen strengthens. COT data is showing that with open interest, and I've just used correlation, not kind of different groups and, you know, asset managers and all this kind of thing. You can look at it, but when you kind of look at this, it's much more interesting to look at the correlation. So the correlation is that open interest diving down tends to correlate with the dollar yen pushing down. So this is making like building a picture of dollar yen short. fundamentals that are certainly supportive of some weakness of the dollar. So now if we look at the chart, that's kind of really all we need. All that information is all we need to kind of like then start saying, well, where can we find a position? Where can we find a trade on this? Now, as I said, dollar yen sort of like showed its first signal on around, well, not the high. If we look at the high here of open interest, the high here of open interest was, oh yeah, it was, sorry, it was the 11th of March. That was the high. And the 11th of March was somewhere back here. So we're a little bit kind of below. But look what would have happened if you just sort of like, if you decided to sell dollar yen off the back of that information, that wouldn't work out. But if you wait for the lower high, then you've got a trade. So now the question is, what are we looking at here? How would we participate? Now, this to me looks like dollar yen strength. Find my trend line so I can change it black. This looks like dollar yen strength. It's kind of bouncing off a level. It's managed to kind of get above here. So now we're just purely sort of like focusing on timing. So this is suggesting sort of dollar weakness, but the data suggests dollar weakness. But are we in a situation where we can trade this dollar short? I wouldn't be comfortable here, personally. We've kind of got this move down and a move up and a higher low along here, maybe an equal low here with a dodgy looking kind of reversal bar, but it's every time it's pushing up, it's pushing down. But down at this point, it's just not that attractive. So now it's kind of like thinking, okay, well, where are the zones? Well, there's a zone here, obviously, because we've already rejected here, somewhere in this area. And then we have to go to the weekly, in my opinion. So if you think about that zone might be here. That's working out pretty well. So if you look at that on the weekly, the reason that this is the weekly zone is that anywhere between there and here is still a lower low. A lower high. It could pop right the way up because of this area here. So if you think about the structure of this trend, there's a high. There's a low because it broke through here. There's a lower high. There's a lower low. Now the lower high would still be in existence as long as it doesn't break through here. There's still a lower high on the weekly. So we know that this area has become a bounce point here and here. So not interested here, but coming up here, this would be of interest. So anywhere around about 148, between 148 and around about 150, it looks like, we have got the chance to look for a position. Now, if that pops up and it pops beyond, because of what the data says, it kind of points to downside. Then we'd look at the monthly and see if there's anything different on the monthly. And really, the monthly has got this area here, which might be a point of interest, but it could go higher. So let's have a look at the trend line. You see the monthly is a lot wider. The monthly pops us right up to 155 and it can still be in a downtrend. So this is where you need to be just a bit more careful. So the first thing to do, always is point out your levels. Point out your levels that you'd need to see some sort of chart pattern, which would suggest reversal. And these areas right now look like the best at this stage looks like 149.60. I can't see because it's black. But around about that point, but between these two zones. Now, of course, another way we can kind of like get to levels is with a fib. So we could draw the fib down here and see what this brings up. And if we look at that as black, we look at this as black as well, just so we can see it. The 38% retracement would happen before it hit that weekly, so that wouldn't be of interest. But there is some confluence around about the 50% and the 61 because of the trend line. So for me, the most obvious kind of price point is this one. The 50% is brilliant actually because it's got this monthly resistance point. So you're looking at like 160, right between 160 and 149.60 and 150 is where I'd be interested in selling this. So that's the kind of the prep that I'd be doing right now is thinking about where is what does the data point to as the suggestive, strength and weakening of the currency market, and it does point to the yen for strength. Where does it point to weakness? Well, the seasonals point to the CAD this week, and they point to the Kiwi, and they point to the dollar against the yen. But over the monthly period, the Kiwi and the dollar really sort of like stretch up. So this would be of interest. Now we look at the fundamental data. There's more fundamental data with the United States, so that points to some dollar weakness. And you look at the COT data, the dollar yen is pushing in, is providing some weakening as well. Now, if we want to do any more work on the COT data, we could look at what's going on with the dollar signals. Now, this is a bit problematic. If you look at this, this is problematic because this is the asset managers correlate pretty highly with the moves of the dollar. And we're talking about the DXY. The reason this is problematic is because it is at historical low contracting levels. And this would probably need some unwind to come up a bit before it was attractive again. Now that could fit the narrative that we're looking at near-term dollar yen strength. Not to trade. I wouldn't want to trade it because you're really sort of going against what the information's saying. And the information's saying be patient. Wait for the chart pattern to emerge that you can short the dollar yen. Shorting it right now is not there on the chart and it's not there on the COT data. And if you do short it too early, you can get battered in swaps. So you do not want to do that. You need to sort of like have relatively good timing with this stuff. So which area would the contracts be a bit more comfortable? Well, somewhere around about the midpoint. If you sort of like look at where this is going, we could probably just sort of like draw some sort of trend line. We could draw some sort of trend line along here, and see if this might just give us a clue. There we go. So it looks like that you kind of want contracts to be sort of, and that's quite a big way. It's quite a long way for it to go, but you'd want contracts in this kind of area. Before, which is, you look back here, it's somewhere between the 10,000, maybe 12,000 mark for asset managers contracts. Now, asset managers net. The reason that this is all useful sort of stuff is that you can go to the CFTC and you can look in a bit more detail. If you look in investing.com, it's just going to tell you the asset managers. But if you look at in the CFTC, then you can have a look at the commitment of traders and look at the financial futures and options combined. And what we want. Financial futures combined. And then you can start bringing up the dollar, which should be at the bottom. Here we go. So the dollar index. Now we're looking at around about 12,500 contracts in the asset managers area. And the way that you're going to work that out is by taking the long minus the short, and it will bring you the net position. So right now they're in negative territory by around about 5,000, so negative 5,000. So we're looking at a bump. We're looking at a proper bump. Now this hasn't been reported this week as yet because of as I say, the July the 4th celebration. But that's what you're looking at. You're looking at these two kind of numbers, the difference between these two numbers, and you want that difference to be around about 12,500. That would be some area that would be more comfortable. I'm not saying that we need to wait for that, but I'm saying that'd be the most comfortable position because down at these historical levels, there's a chance that all of a sudden everybody gets really happy about the dollar and this just flips because loads of contracts go into it because it looks kind of a bit undervalued. The chart backs that up, that the dollar's undervalued. You know, if you sort of like look at these areas here, it looks like it's on a support zone somewhere, and the resistance level is at least from 144, you know, rocking its way up to 149. So you're looking at like 500 pips, 500 pips to the upside before this is a kind of comfortable area that we could trade. So that'd be the first thing I'd look for, which does mean patience, you know. Now, if you're an intraday trader, then the narrative changes 100%, and you can sort of like, you know, you can come in and out of these positions. But if you are a swing trader, then there's times where you're just going to have to sit on your hands. Now, the Kiwi yen is the other one that was of interest. So let's have a quick look at that as well. Kiwi yen looks like it might have a little bit of, you know, I'm on the monthly again, and the Kiwi yen looks something around about the 89 level. It might become of interest. We'll have a quick look at a fib on this as well and see what that does. And that does bring this fib out at 50%. So a 50% rally, a rally back up to the 50% line. This would make this an area of interest to start looking for shorts in the Kiwi yen. And the Kiwi yen looks like it might well have a greater chance of getting to the price point that would become of interest before the dollar. On the weekly, I'm gonna just mark this level off on the weekly. Yeah, that brings us to what would look like a V shape or an inverted head and shoulders kind of neckline area. So that area does look pretty good as a potential hold point. So waiting for the Kiwi yen to get up to this point here, around about 89, and then fading it, that'd be attractive. On the daily, yeah, you can see there's a cluster here. So making sure the job is kind of done in the right order. First thing is make some decisions. You know, what are we looking at? We're looking at yen long, in accordance with seasonality, COT data, and fundamentals. We're looking at the Kiwi short, the dollar short, in accordance with seasonals, and the fundamentals with the dollar. And if the fundamentals are going to bash the Kiwi as well, you know, bash the global economy, that's going to bash the Kiwi. So we're okay looking at that. The other one that might be of interest is the CAD yen, but you can see that the theme really here, and we took a CAD yen position on the Telegram channel the other day. I think we snuck into profit, didn't we, last week? Can't remember. Let me just have a quick look. I think we might have snuck into a profit zone, but this is, you know, something we want to hold on to. If we've kind of got the if we got the CAD yen, we want to stick to it. Let's just see where we are. Here we go. The trade idea. We might still be in. Here we go. No. No, we're slightly in negative, slightly underwater actually. So then the entry was 105.98. And we're looking at 104.38. So 105.98 is just there. So we're not too far away. It's got to break this level before kind of getting into this. So we got a trade idea on the CAD already. One thing about the CAD which is more attractive is the chart. So where the others aren't so good, the chart on the CAD is better because we do have some potential for this to be at a resistance zone. You know, it's not a very tidy one, but it looks like we might well be at a resistance zone. So just going to check the yeah, look at that. You see, there's a horizontal level on the CAD. We are literally on top of this here. So CAD yen is there. If you compare this to the dollar yen, the dollar yen would, for it to have the same look, it's got to test this previous support zone. The CAD yen is testing that previous support zone. So the CAD's attractive. Might not have the right price. Maybe it does fly up a little bit further, but I'd still be looking for shorts. I'd still be looking for shorts in this one, no matter what. And this is a head and shoulders pattern as well. And you can see that there's the neckline along here. There's the top of the shoulder there and the neckline. So, you know, we're looking at sort of something down in this area for first point of profit, and then dropping down further because this also is sort of like starting to drag up through the trend line. Let's just draw a straight line here and have a look. Yeah, you see, it's right on top of it. So technically speaking, on the chart, the CAD yen looks the best, and it will probably go with the dollar and the Kiwi. So it's not you know, to say that this would not be on the table would be wrong. This is definitely still on. So we're still looking at CAD yen short. We are in that position, and we'll see what happens. If it takes us out, I'm going to look for another entry. But we'll see. So I will wrap it up there. Have you guys got any questions? The main theme is that the yen looks like the currency to trade. You guys got any questions or any other thoughts on anything else you want to look at quickly? Yen currency to trade long, by the way, not short. Even though you want the CHED. Gold. Everybody always asks about gold. Okay, gold is one. I mean, gold for intraday is fantastic, isn't it? So it is valid. So let's have a look about gold. Yeah, do you know what? I hate this chart. I hate it. Okay, so I guess things to note with gold. Firstly, there's no question that this is, you know, uptrend and looking for anything but along is dangerous. But that is problematic. That is problematic. That's problematic. That's last month. That's all from last month. There is a case to be made that this area here needs to be retested at 27.65 or in and around that kind of point. The chart and the price has got well off this trend line, so that's problematic. And that would sort of like see, you know, gold come into this area before kind of like taking a bounce. That's problematic. If we look at the shorter term timeframes, we have a sketchy higher high here, and I say it's sketchy because the closing price is above the previous closing price, but it's not above the wick. So this would be a higher high, maybe. That is still a higher low. So there's no kind of downtrend there. There's a support level there on the weekly that got broken, but now we're back inside of. So that's problematic as well. If I was going to trade this, I'd probably look for short, probably, but I wouldn't want to take it on until it hit this trend line here. This is what we got, or a break to the downside. But you'd have to wait for the break because this could easily continue to come down to the lower end of this band and flip back in the opposite direction. But so for me, I'd want to see a genuine break below the probably even below that point there, but a genuine break below the trend line, and then on retracement, then it would be something of interest, to sort of like trade around these levels here and hit that horizontal level. But that hasn't happened, and anybody that was attempting to allow that to happen recently has not had a good time of it. So shorting gold wouldn't be something that I would be keen on. I'd probably look for shorts because that's kind of my nature, is to sort of like go against what's extreme, not go against the crowd, but this has been an extreme move, and I'd want to go against that. Now you look at this on a daily. So what do we got on a daily? What we got, firstly, just kind of tidying up what we're looking at. We've got this pattern. Where is it? Is it there? That's not particularly crisp, is it? Yeah, I mean, I guess you could trust that one. It's not great. Yeah, you'd have to. This actually looks all right. That's what you're looking at. That's the trend line. They're the two lines I'd be sort of interested in. While we're in between here, difficult, difficult. But I'd probably at this stage, because we're in a range, and you've got to trade what you see, and you might see something different to me. Definitely, the overall picture is long, and the monthly is long. The tails are suggesting a little bit of profit taking going on here. So and we're in this daily range. So at this stage, the way I'd be treating gold is I'd be looking to buy it here and I'd be looking to sell it here, and I'd be closing the position every time, or at least kind of closing the majority. If I was buying, I'd be closing. If I was selling, I'd probably want to hold a bit just to see if it kind of pops through. But I'd be buying at the lows and selling at the highs right the way along the line. But I wouldn't trade anything in here personally, because this is in a trading range. No way of knowing when this breaks. But the one thing about a trading range is that you kind of want to trade it when it's at the extremes. You want to trade them when they are at the extremes. There's a horizontal level there, so you're looking probably in my opinion, from what I can see, 34, 34, 30, something like that. Your charts might look a bit different to this one, but yeah, it looks like 33, 35. No, that's where we are now. 34, yeah, around about the 3,400 level. I'd be looking at a short with gold, and I'll be looking to take something off the table here and see if it pops through. And in my opinion, you'd have to take something off the table because it's been popping back up so aggressively that you might make some money coming down, it pop back and take it all off again. So I'd be selling it here, popping it down, and seeing if there's anything to trade down there. And I'd be doing the same on the long side right now because we're in a channel. So buying down there and taking profit when it kind of got back up to the higher zone, and that's at 32.20. Anything in between, I wouldn't be looking at. How do you feel about that, Cleon? I don't, I'm not saying that that's the right way to trade gold, but when I look at this, to me, if this wasn't gold and it was just a chart, if I'm looking at this in a chart, I just see a trading range, and I see the best way to trade the trading range is by buying the low and selling the high. Um, and because we're high, I'd probably want to hold positions on the short side, but not on the long side. That would be my take on it. All right. Anything else that you guys want me to quickly look at, or we cool? I mean, that's my take, Cleon. I'm not saying that that's the best way to approach it intraday, but that's the only way that I'd be looking at this and saying that to me looks the safest thing to do, because the probabilities are we bounced off a high and we bounced off a low, and we're in this trading range. Thing is, though, this is sort of like, going back from February, March, and now we've had June. So you're sort of trading, if you're sort of looking at this on a time basis, how long it takes for it to kind of get to these levels here. I mean, this is quite interesting in a lot of ways. Let me see if I can bring this so you can see it. I didn't want that. Let's just mark this off for you. Okay. This gap is 26 days or 26 periods. There's another 26 period here. It looks between the two. Yeah, maybe back one. The next 26 period is there. Let's put it on it's the other side of the line there. So when's the next? It's all the way over here. Somewhere around here, which is the 18th. Now, the only reason I bring this up is that if you look at this, if you look at the position here, it's 26 days between the this low and this low. And then in another 26 days, there's another low. Yeah, 26, 26. There's two lows there. This is where it might get a little bit off kilter, because that is a high after 23 days. But it looks like we're looking at around about every 3 weeks, we might be making a price point of some significance. So that's the other thing that I would I would take into account. Oh, sorry, Sam. All right, we've got to push off. I will see you guys soon. Have a great week, and stay steady, stay patient, and just try and think logically and kind of with a clear head today, and then you can try and approach your systems properly tomorrow. Thank you, guys.